We're now joined by Tyson Barker, Director, Transatlantic Relations, Bertelsmann Foundation, which focuses on all things Europe. In this particular case, we're going to talk about the economy. These PMI numbers that we're talking about, they came in below 50, which means it's a contraction. To be honest, the market didn't seem to really care all that much, other than they might perhaps think that bad news is good news because that means the ECB may possibly have to cut rates further. How do you read the data?
I think that that's what the markets are starting to build in. We saw a slide in the value of the euro vis-a-vis other major currencies today. I think markets are starting to expect next week a cut in the ECB's rate from 0.75% to 0.5%, and also perhaps other unconventional ECB action going forward.
Is this bad news? It doesn't feel like bad news. I mean, we've seen bad news and the market keeps moving higher. People seem to feel very good. The news gets worse and people feel even better. This is very odd, I think.
I think it is bad news in the sense that you see Germany's economy, which was the anchor of growth, if there was any growth in the Eurozone, starting to take the slide that everybody thought was inevitable. If you see demand, the German economy is 50% of it relies on trade. If you see the Eurozone slipping, if you see softening of growth in China, softening growth in the United States, once that starts to affect Germany, people are going to start to wake up.
But I got to be fair here. We have seen weakness in China. We saw weakness in China's PMI numbers. We've seen mixed numbers in the U.S. I know the housing numbers are good, but we're still struggling with the unemployment situation here. And in Europe, it's still a mixed picture. I mean, I know half the people say it's good and bad. So aren't we seeing the stats that should be causing concern? But it seems like few are concerned.
Well, a lot of these indicators have a lag effect, right? So there are a couple things that are going to affect Germany's growth. And again, Germany's the anchor of the Eurozone. You see the depreciation of the yen, which is a direct competitor with Germany in global export markets. You see a decline in energy prices in the United States, which as a factor of production gives U.S. companies some competitive advantage vis-a-vis German companies. And then you see our crisis of the decade, which is the Eurozone crisis, sticks with us.
It's why we have jobs. I'll mention a couple things. I just want to get your quick thoughts. You can say they feel good, they don't feel good. Manufacturing.
Manufacturing in Germany still remains robust. However, I think if we watch over the next, say, 6 months, we'll start to see whether this is going to be a durable slump.
Retail sales, Europe.
Retail sales are down across the board. Germany had a loss of 11% auto sales over the last year, so that's going to hit pretty hard.
Unemployment, Europe.
Unemployment in Germany is kind of the wild card. The German economy has shown a lot of resilience to economic slumps. That's one of the reasons why the Merkel government was reelected in 2009, even though the economy shrunk by 5%. It's because they built in stabilizers to keep people in their jobs.
Unemployment in the land of summer vacation.
Unemployment in the land of summer vacation is durable in the opposite direction. We still have structural unemployment, youth unemployment over 50% in Spain and Greece. Until we solve that issue, Europe is going to look like a difficult place to live.
Italy, politics.
The Italian politics, the gift that keeps on giving. Again, we'll probably see new elections, uncertainty. This summer, Confindustria, the main industry organization in Italy, has said that this will probably cost Italy 1 to 2 percentage points of GDP. So political uncertainty is Italy's #1 concern.
I want to point out something. I mean, through all this crisis, and we're having some fun with this, but at the same time, there's a serious issue with the euro. The euro is strong. It feels strong. It looks strong. Are we misreading this?
I think that the strength of the euro, anytime the euro slips below, euro-dollar exchange rate slips below $1.21 to €1, that's when we know we're really in trouble. But it's investment in Germany, investment in German bonds, which are keeping the euro at the strong rate that it's at. So the imbalances throughout Europe are still things that need to be corrected for.
Tyson Barker, someone who talks even faster than I do, Director, Transatlantic Relations, Bertelsmann Foundation. Thank you very much for coming on Biz Asia America. We will, of course, have you back again.